As a fellow Bostonian, I respect you so much for leading the charge for our thriving startup ecosystem. And now you're a senior associate at Two Lantern VC. Lily, welcome to the podcast.
Thank you. So happy to be here, and thanks so much for having me on.
Yeah, could you talk about your journey from the beginning of being interested in VC all the way to right now at Two Lantern VC?
Sure. So I can give the quick background on myself and kind of how I got interested in the venture world. So I started off actually wanting to be a doctor. So I was pre med for about the first week at Georgetown University while I was in college, but pretty quickly realized that wasn't for me. I switched my major to economics and government, and I ended up getting pretty involved with the student investment fund. And then by my senior year, I was actually leading the student investment fund. So it was a equity only fund, but I had worked at a few different startups in college as well. So these startups gave me my first exposure to the world of raising venture funding, but on the other side of the table as one of the founding team members. So I was at a startup called Verifix that was pre-seed at the time, helping them out with creating pitch decks, networking, going to different events, and really was very excited to be at such an early stage company. It actually inspired me to then, when COVID hit and I had a lot of extra free time, I started working at another startup too called Resulted. I was actually called Nanovest at the time, but they switched their name. We went through Techstars in 2020. And it was really those two experiences while I was still in college that exposed me to the world of venture. I started learning about the fundraising process, just all the opportunities available, and ended up then also doing a part-time venture fellowship with Plug and Play Tech Center while I was a senior in college. So had that experience too, helping them diligence different startups. And then eventually, once I graduated, I had gone into consulting at LEK Consulting, but still maintained that really passion for working with early stage companies and startups, as well as the passion for investing. So when I was thinking about my longer term career, where I wanted to end up in 5 years, 10 years, I realized that venture capital would really combine those two passions of mine. The passion for early stage companies at LEK was an incredible role, but I was really working with large pharmaceutical companies. It was a much different environment. So I ended up switching to work at another early stage startup and then eventually deciding to pivot into venture capital about 2 years ago in early 2023.
Yeah. And that's why it's so amazing because, you're really, really early in college and you kind of just got interested in the startup place, in the finance space. And then really, you actually went out and did these internships and you kind of also started a startup. So it's like you actually had this startup experience right in college. And then after you graduated, it was like, okay, let me try out consulting, see how that goes. But then you actually went back to startups and you thought like, okay, I rather prefer the early stages rather than, working with these large corporations. And now you're here at Lantern VC. So it does sound like that, the most transferable skills are actually from the startup experience to VC right now. Was your first few months transitioning into VC hard, or was it just like kind of natural?
Yeah, so I joined at actually a very interesting time in the market. It was early 2023. So if you remember that timing, that was right around a lot of instability with banks. SVB was going through their collapse and acquisition process. There was a lot of market uncertainty. So I joined within a few weeks of that occurring. And it was a time where there was really this huge shakeup going on. So joining at that time was definitely an interesting experience. I think it honestly helped in a sense since there was this increased caution, kind of a slowdown in the market where there had been this heightened market cycle in 2021, 2022, these very high valuations, very quick diligence cycles. Really just there was so much going on and it kind of slowed down in early 2023 with all that uncertainty. So I think that timing was a little bit helpful since it gave me some time to ramp up, kind of get smart in venture. But I'd say that working at some startups beforehand was the most helpful for me since being in consulting, it's such a different day to day experience. You have your at the time I was a first year associate, then second year associate, then you have the associate consultant above you, consultant, manager, partner, managing partner, just all these levels of hierarchy. And it's something where you don't take as much initiative versus being at an early stage startup is more similar, in my opinion, to being at an early venture fund where there's a lot of responsibility on you. You're taking a lot of initiative at a young age. So I think that experience was the most similar in the day to day and really helped me prepare for my role in venture.
Yeah, and you also did an internship in Fidelity. That's about
That's
ESG.
right.
Did that also translate to helping you in your VC career at some point?
Yeah, so I was very had an amazing experience at Fidelity. I actually interned there for 2 summers in college. So my sophomore year summer, I interned on their ESG team, and then my junior year summer, interned in equity research there. So I did an ESG project my second year summer too, since that was an area I was interested in, but had more generalist exposure that summer. But I'd say that the ESG component is something that is personally an area I care about a lot. I had the opportunity actually to help when Fidelity was launching their woman focused fund. So it was a fund where we were determining criteria for investing in companies that were either female led or had a certain percentage of women on the board, women in key positions of leadership. That was something that I was really excited about and had the privilege of working on at a pretty young age, at age 19 during my internship. So I'd say that really helps me understand too what the institutional investors are looking for when they're developing their fund structures. Of course, ESG is a very specific area, and Two Lanterns were generalists, so we don't have the ESG focus. But I'd say one, it was just something that I was passionate about and very excited to be a part of. Felt like I was really having an impact too, since ESG was back in 2019 a bit newer too at Fidelity. So that was very exciting to be on the ground floor. And then I'd say it also helped me better understand the perspective. It was more the public equities market, but I think a lot of those skills are still very transferable to venture when it comes to market research, understanding how to read analyst reports and look at companies. Of course, that's there's a lot more information when you're looking at public companies versus pre-seed startups, but a lot of the motions and research activities have kind of the same roots. So I'd say that really helped me just develop a framework for how I thought about researching companies.
Yeah, and that's the most important part because you also have to research them to make sure that you understand them, well enough to some extent, just because, especially in generalist VCs, it's like you would never understand more than the founder themselves, but you should at least understand like, hey, what exactly is this market size? Is the founder actually telling me exactly what I think as well? But then you should debate with yourself, like, what is this? What is that? So, who is VC not for? What skills should they have?
So I'd say VC, there's a lot of different backgrounds you can have and go into VC. I don't think there's a one size fits all approach. And I think it definitely varies significantly by stage of investment, by industry focus. What skills work well for very early pre seed seed VC are different than what is more applicable at the later stage or growth stage for venture. I'd say I've seen people come from investment banking, consulting, startups, some people coming directly out of an undergraduate degree, although that's more rare, or an MBA program, or maybe a STEM focused graduate degree or PhD, depending on the fund's focus. So I'd say you really can have any background and get into VC as long as you're passionate about it, you're willing to put in the work, understand and develop the skills necessary. But I'd say for who it's not for, I think you really need to be a self starter. So if you're someone who prefers having just a lot of structure in your day to day, you need that management, or maybe you want more. There's a lot of, I'd say, ambiguity in the day to day. Like you really have to go out, find the founders, meet with them, set up meetings, go to networking events, meet with other VCs. There's just so much that you need to take initiative on and be proactive with. There's not a just set checklist of tasks to do each day. So I'd say if you're someone who thrives in that sort of ambiguous and need to take initiative environment, VC's for you. But if you're someone who craves more structure, it's not to say that VC isn't for you, but it might be a bit harder to make that transition. And I do think that later stage, more growth equity style venture is a bit more structured than the earlier stage, since at the early stage, some of it includes going to um, events at MIT and chatting with students who are starting pre-seed funded companies, a lot of just the more unstructured and it's what you make of it type of tasks.
Just like Lily says, the process, you have tons of freedom, but the end result, you talk about like all this freedom to really just do whatever you want. Is it actually like that? Like, what is a day in your life as a VC?
I'd say the no day is the same, especially for me. I'm on a small team, so it's just three of us. So depending on what needs to be done that time of year, depending on whether we're in late stage diligence on a new deal or if a company in our portfolio is raising a new round and we need to help out with that, I'd say it really changes day to day. I split my time pretty evenly between the new investment side of things and the internal admin portfolio management sides on the day to day, thinking about just this week, like there may be a day where I have two or three meetings with new founders that are first meetings, a meeting with a company that we're in diligence on, or a call with one of their customers or one of their employees, a call with another investor. I like to set recurring check ins with some of the investors that have similar theses to us too to see what they're seeing in the market, if they have any good deals to share with us, and vice versa for us to share with them. I might go to a in-person breakfast or join a webinar or go to a venture capitalist happy hour after work. So it's a big, I'd say, mix on the day to day. And then on the internal admin and portfolio side of things, I often am leading check-in calls with our portfolio companies, sending them surveys to request metrics periodically, organizing those metrics that we can report them to our LPs, writing newsletters for our community and our investors, helping out with anything from planning a small group dinner to a large 80 plus person breakfast with a panel. So doing some event planning, marketing, all of that too is, I'd say, a core part of my job. And I am someone who really enjoys that. I think that's a reason why I initially had gotten into consulting too. I liked the change up of always doing a new case, working on new projects, no day the same. I think in venture you get that to an even higher degree where it is there is structure in that you have your goals, your metrics, and I'd say there's that type of structure, but on the day to day, it really just depends. And a lot of it's really on you to seek out those opportunities, develop your personal network. And at a smaller fund like this, too, I'd say it is more general. I have some friends who are at funds where at the analyst and associate level, you might be purely sourcing or purely diligence or purely portfolio ops. And so for myself, I like having that opportunity to learn about kind of the full fund life cycle and work across areas.
It's all these three parts where it's you either helping the founder, you're either finding new great founders, or you could be kind of in a VC platform role, just like helping wherever you can. Could be marketing, could be holding events. I know that you host like amazing breakfast and dinner events. Could you talk about how you even set these up and like what's the basics to really make a great event, really make people feel comfortable and happy during the event?
Sure. Yeah. So that's something that I really enjoy. Before I joined the fund, I had hosted events while I was in college for some of the groups I was in. I was on the event planning committee for the International Relations Club at Georgetown. So we would always be getting cool speakers that were in Washington, D.C. to come to campus, planning things like that. And then I also was the events chair for the Georgetown Alumni Group in Boston, still plan events for them. So it's something that personally I really enjoy, just bringing people together, planning something that is fun and unique. And then once I started this role, so we were founded in 2020. So the fund's only been around for 5 or so years. So when I came on board, we had more bandwidth to host more events, everything from small group dinners to larger panels. I'd say for me, I really try to get a diversity of events. So things that are more founder focused versus more VC focused versus a mix. We like to partner with anyone from Like, for example, we do events at the MIT Media Lab since there's so many incredible student founders and professors, academics who will attend those events and who we can partner with. We've co hosted with other venture funds in Boston that invest at a similar stage to us. Sometimes we'll be asked to come in and speak to a class at one of the colleges, and we'll put together an event around that. Something like having a couple of our founders come in and chat with the students. We've hosted breakfasts, and sometimes we'll also partner with a sponsor here in Boston, like a bank, a law firm, someone who wants to connect with startups in the community or other VCs. And they're amazing since they also have can leverage their networks and help with some of the logistics and planning for the event. Um, and then we also like to do smaller, more intimate dinners where maybe we'll invite a few other investors, get people together, meet each other. I like to bring together who people sometimes who haven't already met. I did a women's dinner recently, which was great. It was a bunch of women from different funds, mainly junior to mid-level women in Boston, and we all met for dinner. And afterward, I'd say people made a new friend, made a new connection. So it's nice. I'd say I've even met some close friends just through VC events and events in Boston, and we have a really strong community here.
Yeah, it sounds like you're a natural at this. And, especially since you've been doing it in college already, that's the best part is when you actually start doing all of these stuff in college, it really is transferable, especially to VC, where you're building this community, you're building like a bunch of events, and, you know, getting people to attend and also like leveraging your connections to make them feel at home is a skill. And, it's a skill that Lily also has. Uh, could you talk about more specific, as in like, these really big dinner events? Do you just like prepare all the food, as in like go to a restaurant, prepare all the food, and then just give them a name tag, and then everyone just converses with themselves, or is there more to it?
Yeah, so I'd say it depends. There's some more free form events where we might just partner with a sponsor who often a sponsor might help pay for or coordinate the menu with the restaurant. And then we might coordinate the logistics or some mix between the two. And sometimes we'll do something that's more free form where it's really just a networking happy hour. It's unstructured. We have some fill in your own name tags on a table by the door versus we may also do a more structured dinner, have pre-printed place cards and a seating arrangement, have talking points planned, maybe have a printout or some slides. We've also planned panels and speaker events where we'll have a speaker or a few speakers on a panel to discuss, for example, the impact of AI on venture or what they think the market will look like in 2025. So for those types of events, it is definitely more in depth of a preparation. We might have a prep call with the panelists the week before to go over talking points and questions, but it definitely varies. And we like to do a good mix of both since it's often a different group of people that might come to a more casual networking event versus a more structured panel on advice for aspiring founders or something like that. So I feel like we can get the best of both worlds by having that variety, having something for everyone. And of course, we'll do sometimes a more other VCs focused event versus more trying to attract founders to come. So it does vary. I'm the one in charge of name tags, so I'll just go to Staples, get those printed, sometimes print out a sign. I like using Luma as an event page. I think that's been really great. There's also some other ones like obviously Eventbrite, Market, that's one where the founders local, Partyful, a variety of event pages, but I found Luma to be the most useful recently. So that's the one I've been using. And then we have several email lists. So we'll host events in Boston, New York. We hosted one in Tel Aviv recently. So we have event lists of potential guests and people we might invite. And then we'll just leverage our networks. And something that actually I found to work really well is last year for one of our happy hours, we had in the RSVP form you'd fill out your name, company, and then there was a spot, since we were mostly inviting other investors, where you could fill in the name and email of a portfolio founder or founder in your network who you recommend we invite. And then I could take all of those, compile them, and send invitations. And that helps us get more founders involved and expand our own networks.
Yeah, and that's the best part. Even if you're starting all these events, there shouldn't be like obviously it can be casual, it can have very structured, just like Lily says, if you have a variety of events, it's really, really good to just like have a bunch of events, kind of host it. And heck, it's like banks like SVB would actually sponsor you
Hmm.
sometimes. So it's like you have to look for who would sponsor you, or maybe it could be even something so casual as just like a group walk or something
Yeah.
in the Boston Common. In Boston, do you know, or every year, is there a particular event or organizers that you always go to events to?
So I'd say it definitely varies a lot. I think the accelerator programs here, like Mass Challenge, has some really incredible events. I always try to go to those ones. That's definitely one of my top most frequented event spaces. They have a great office out in Seaport, and they often host events for showcasing their startups, for networking. They'll do different industry focused events. Techstars also Venture Lane. So I'd say the accelerator programs here, if you're someone who is an aspiring VC or founder and looking to find more lists of events, I would go on the website's newsletters of all of those programs and sign up. There's also some VC funds that we're friendly with that will frequently have events, and that's more of an ad hoc email invitation structure. There's not Techstars, TechCrunch. This summer in July, they're here for a few days. That one's great, but I'd say it definitely varies. There's different emails you can sign up for, text chains. Um, Maybe even like WhatsApp groups or Slack groups where you can find different events. And I think it kind of happens naturally over time. If you attend one event, you might gain access or meet people who are hosting others and get on their lists. There's also the CIC in Cambridge. That's great. And they have a Thursday afternoon or Thursday evening event, usually. I think it might be every week or every 2 weeks that I go to a lot. And then all the universities here, too, they're constantly having demo days. There's the MIT 100K challenge, there's Harvard Innovation Labs, there's all these different programs. And that's something where I like to stay up to date too on what's going on in the university community.
And the important part is just like Lily says, all you really have to do is just go to one event, and then other people actually just start inviting you to like other events. And these could be even more private. So then the people that you meet there might be even more senior to you, which is actually better for you. But
Mhm.
it's like as long as you go to one event, maybe even, you're a student, then your first event should be something from your college. It could be a college club speaker event. If you go to Girls into VC, if you're part of that program, then those have tons of events as well. And you might have met Lily there. But there's tons of events, including things that are hosted by Mass Challenge, which is founded by Lily's mentor. But what you have to do is just take the first step. Like literally, if you just take the first step and actually just go to them, you will be invited to more, and you can find more by just talking to the people there. Could you talk about, let's say you go to these events and then you meet a founder. What is the top three things that you look for, whether or not you're going to invest in them?
Yeah, so I think as a generalist and someone who invested the pre-seed and seed, again, this is very situation dependent. And we aren't a fund that has a hard and fast, you must have X amount in revenue. We'll even go pre-revenue. So I do think it is very qualitative as opposed to quantitative. But for us, I'd say the top three things we look for when we're valuing a startup are the team, the market, and their traction. And team is much more heavily weighted than the other two. For us, so we're investing so early, we know your technology may pivot and change several times before you even reach the next stage or before you reach a exit outcome down the line. So we want to make sure we're investing in a team that can weather that storm and has the differentiated ability, founder market fit, technical know-how or industry expertise, or maybe it's a network and Rolodex of people in the industry they can sell to. So something that really differentiates the founders and gives them an edge over potential competitors. And then in terms of the market, it needs to be a big enough market. There's plenty of incredible founders I've met where they have a company that they've started that may give them a very successful outcome. Maybe they become a millionaire from it, but it's not VC backable since it's a too small of a market. And those can be more of a lifestyle business, something that just doesn't have those potential for outsized unicorn level returns. And for us, we really only want to invest in those companies that do have that really large market they're targeting. And then the traction. So for us, we do go pre-revenue at the pre-seed phase. However, we do want to see some sort of customer validation, whether it's strong design partnerships, a several unpaid pilots. If it's a digital health company, for example, maybe they're in a hospital's accelerator program with strong buying indicators. So it isn't a hard and fast rule. And I'd say the traction is almost the less important factor at the pre-seed stage. Of course, it becomes more important once you hit seed stage. You will look more into their revenue, have customer conversations, all of that. But I'd say at the very early pre-seed, where most founders are starting out, it's really the team that's the number one thing we look at. And that team can be differentiated in a bunch of different ways too. We want certain qualities we look for in founders. We look for founders that are high resilience, since when you're starting a company, you're going to get kicked many times and have all these obstacles you have to overcome. We look for founders with high integrity as well. We want visibility, transparency. We want a founder that is cooperative and going to work with us. But again, there's no one size fits all. I'd say we have successful founders who have all different types of personalities, but the team is the one constant that's our number one focus when making our decision.
And that's all it takes, especially in early stage VC, is as long as you have a great team. And let's say you meet this VC, right? You meet the founders. What are two questions that you can ask them in the events, like to really see like are they the right team?
Definitely depends on the founder, but I'd say one of the biggest questions I ask them is what their moat is and how they're differentiated, especially today with the cost of starting a business just dramatically decreasing due to the advent of AI technology. You see a lot of just kind of chat GPT wrapper type businesses that could be copied by someone else very easily. So the way that they're differentiated is one of the biggest questions that I like to ask and understand. Again, can vary. It could be very strong technology and patents. It could be the founder's own network. Maybe they come from a company where they have had 15 years in the industry, very deep expertise, and they have contacts at all of their potential customers for this technology that differentiates them. So again, it can be a lot of different answers to that question, but the way the founder is thinking about it too is one of the things that I really like to understand. And then I like to also talk about their roadmap and ask them where they see it going. So, since often I'll meet a founder at an event like this and they're raising their first round of capital and hearing their projections for the company, understanding how they think about the market. Which segment do you plan to start with? What's your ICP? And then where do you plan to land and expand from there? What's your revenue model going to look like? It's just understanding, even if they are so early that they don't have that much data yet, what their plan is. And then when I do ask questions about it, are they able to adapt to those questions and really have they thought about it deeply and what is that plan? And then for the seed stage, it is more about the traction too. So that's something that I'll dig in on, understanding what their customer feedback has been, what their growth rate looks like, their ARR, the cost of acquiring customers, what their go to market has been like so far, and then what that will look like once they raise this additional funding and expand. Often they may have only had the founder led sales up to this point. So, understanding what their plans are to build out that sales team and have that really repeatable, scalable sales motion as they expand beyond the seed round. And then yeah, I'd say those are some of, I think you only asked for two. That's probably three or four, but the questions really are endless. And a lot of it depends too on what they put in their pitch deck. Sometimes you'll have a pitch deck that's a bit sparser, and sometimes I'll get really incredibly detailed pitches where a lot of my initial questions are already answered, and I'll get to go deeper and ask them more specific questions as opposed to those high level ones. So, as a founder, I definitely recommend having a very detailed pitch and pitch deck so that VCs can go right into the more customized and tailored questions as opposed to asking the more general ones.
Just like Lily says, it's really about the moat and the distribution and what their past experiences. How about like a question to really gauge their resilience?
I'd say, depending on the founder's experience, if it's a repeat founder, you can ask about their prior company, what an obstacle they've overcome is. And then I also like to just get to know the founders personally. Sometimes you'll hear about someone who maybe their background demonstrates their resilience. Maybe they immigrated here and worked their way up, had many different roles that shows really that ability to continue to grow in a role when you're coming in. Like I'd say there's a bunch of different ways. Maybe they were an Olympian athlete that trained and were able to win that award. Maybe they have a very strong academic background. So it can look different depending on the founder and also depending on the founder's age, their experience. If it is for a further along company too, you can ask them what the biggest obstacles have been so far with launching that technology and growing it to that stage. But even if you're a new founder and you really just started this 6 months ago, I'd say your personal background, your professional background, even a personal anecdote, it could be about overcoming an injury. It really can be anything. And for us, we're just really looking for someone who has that resilience. We invest in the US and in Israel. And right now, our Israeli founders have been dealing with the impact of the war, all of that. And that's been something that we've just been so impressed by their ability to be resilient in since it's definitely been a difficult few years. And we've been so thankful for their resilience. And yeah, so it can definitely come in different forms. And I'd say each founder can demonstrate it in different ways.
Especially when you ask them, like, just like Lily says, what obstacles have you faced? And then how did you address it? If they kind of put excuses and not own it,
Mhm.
then that's how you know they're probably not a good founder. But if they own their mistakes and say, like, I'm going to do it again, I'm going to try harder, I'm going to make it right. And then you know that, this person is actually genuine and you can actually trust them. And you know how they say, like, a VC relationship is longer than a marriage. Yes, that is so true. So if you want to, invest in someone, it should definitely be someone who's very transparent and someone who you can actually trust. And that is how the greatest relationships are built. And that is how the greatest companies are formed. Could you talk about, you know, how did, what are the key reasons that you were chosen for your associate role?
For me, I had a unique combination of startup experience and investment experience. I started at the Verifix when I was 19. It was a pre-seed startup at the time, and I was the second non-founder employee. So we were a team of about 4 people, myself, the two founders, and a founding engineer. And I had really a jack of all trades, plug in wherever is needed type of role there since we were so lean. So that really gave me that experience of being on the ground up. I would help with pitch decks, help with surveys. I was living in Washington, D.C. at the time, so I remember attending a AFWorks event, which is the Air Force Accelerator program. And the time they tried to offer me a drink, and I had to tell them I was too young to drink since I was 19. So it was me and a bunch of people probably in their 50s. So I think just getting in at a very young age and getting that experience when you're still really in a formative time in your life, getting that exposure is so invaluable. And for me, being at Verifix really opened my eyes to what the world of fundraising looked like as an early stage company. And it inspired me so much that when my college kind of shut down during COVID and put everything online, and I had extra free time during that time period, I took on a second internship at another startup called Resulted, which soon went through Techstars while I was there. So I got to have the Techstars startup experience. That was more of a marketing focused role, while Verifix was more of a just general strategy, business development. And so I'd say those two roles very early on in life really exposed me to the world of starting a company, figuring out the fundraising landscape and how to navigate it. And then also while still in school, I was interning at Fidelity, and then I ended up becoming CEO of Georgetown's undergraduate investment fund. So managing about 150K of students' assets, investing in the public markets there. It gave me both perspectives. And so I think the combination of the startup point of view, the investor point of view, and then also going into management consulting at LEK, I was understanding more of the business strategy side of things. I started off in management consulting there and then joined their private equity group, so M&A consulting, which also I think has been very invaluable to understand about how large companies look at the process for acquiring smaller companies. Of course, it was a little more pharmaceutical focused, which isn't quite what we do here at Two Lanterns, but the just thought process, market sizing, analysis, speaking to experts, that whole process really showed me what goes through someone's head when evaluating a smaller company. So, all of that kind of combined, I think, helped make me have a really strong background for the role. And then, and I'm sure we'll get into the whole venture recruiting process too, but I think the persistence that I showed while I was looking for the role also is something that helps make me stand out.
And it's like you had all sides of the coin, where it's like you had the hands-on startup experience, and then you also had the investing side in your club in Georgetown. And then you also had the research analysis side, the due diligence from the corporate, high
Mhm.
level strategies. So you really understood like, hey, I don't really want to do corporate. I really want to do startups. I really want to help young companies and then make them into something that's really, really big. Did you have to like just like send an online application, or did a connection kind of refer you, say like, hey, meet these partners. You might be great for VC. What was that process?
So, a bit of a mix. It was actually I cold outreach to my now boss on LinkedIn via LinkedIn message, and then at the time was able to go get coffee with him. And then this was about, I think, almost 6 months before I ended up getting the job offer. So got to know him first, developed that relationship. And then when they did have an associate role open up, I put my hat in the ring, filled in the application, and went through that process. But I initially had cold outreach to him and then developed a relationship and then was able to apply once a relevant position did open up.
And was it for VC, like you were asking for a VC role, or how did you build that relationship with him?
At the time, I was asking for advice on breaking into VC, much like I'm sure a bunch of your listeners are doing right now. So I was setting up a coffee chat without really an agenda of trying to get a job with the partner. I was just trying to learn about his experience in the industry and see what advice he had. And I think that also helped. A good quote about it, but just asking for advice instead of asking for the job, I think is something that can be really valuable since you're not putting that burden on the person of asking them to do something for you, or instead you're just having that conversation, building the relationship, and then a lot of their advice may help shed light on what they're looking for. So then when they do have a job role open up, you can see if you're a good fit and help tailor your application to what their preferences are. And so I think that's a really strong kind of approach and something that worked for me. It definitely also, some of it is good timing and luck if the market is bad and no jobs are open versus if there's job openings. So a lot of it too can take a long time to find that perfect role. And I would make sure that if you're someone who's looking for a role in VC, you don't get discouraged. It's definitely a competitive industry and can take a while to find the perfect fit.
And especially right now, if you're younger, it's the perfect time to really build relationships
Mhm.
and build trust, with whichever industry you're actually going into. And if it's VC, then talk to VCs. After you talk to VCs, you want to maintain that relationship. Could you talk about how, you would do that long term? What will you do to really maintain that relationship so then whenever they're thinking of hiring a role, they think of you?
Yeah, I'd say that when you're having a relationship with someone, especially someone who is more senior than you, maybe you're currently a student or very junior in your career, it's important to not always be asking for something, not always reaching out asking, oh, can you make an intro? Can you help me with this? Can you write me a referral, a recommendation? Instead, be someone who is, it's a bit more back and forth. Maybe you know that they invest in health tech and you see a really exciting health tech startups, you send it to them and say, hey, thought of you. I know you're fun, invest in this. So I would say finding ways to stay in their radar that aren't all just asking for help. And you're also contributing, even if it's not something they invest in, or it's as a student, you probably can't add a huge amount of value before you're working there, but just doing something that shows you're making an effort, I'd say really pays off. And then it also makes them just think of you. Then maybe they hear about a friend that's hiring and they think, I remember Lily, she's interested in this industry and venture. I'll send her the application, something like that. So I'd say finding those touch points that are more casual and aren't just always you asking them for something is really important. I'd also say just maintaining those relationships, I think in person, honestly. And I have almost always held remote jobs, but I do really vouch for in-person interactions. If you can grab coffee with someone, they might say no, but have it over Zoom or have a call. But if they say yes, I think just having an in-person face-to-face is so valuable. It makes you stand out more. They remember you more clearly when you meet in person. And it just is easier and more casual to talk to someone face to face versus over a virtual call.
And it's just like Lily says, give them the little touch points so then they can think of you as in like, there's not much people. Actually, there's probably no one who actually just like sends, after a meeting with a VC, they're like, okay, how do I break into VC? And then after the meeting, like there's probably maybe 1%, less than 1% of people who tries to send like deal flow or tries to send like articles to that VC that VC might be interested in. So like if you're the one doing it, oh my gosh, like there's just so much opportunities because not only does that VC thinks of you if they're hiring, but VC's got lots of VC friends, just like Lily. So it's like, when they see like, hey, my friend is hiring, and then you've got this really talented person, this really resilient person, then you're like, okay, let me just give them a little recommendation or just send them that little application link. Could you talk about the recruiting cycles? When does VCs recruit big and small firms?
I first went into consulting when I was fresh out of school, and I remember that was a very strict recruitment cycle. You typically did a junior year internship, and then you would do all your applications. If you didn't stick with your junior internship firm, you would apply that summer before senior year, have your interviews that August, and have your job secured by September of your senior year to start the following summer. Same thing with investment banking, similar with private equity, but venture is a lot less structured. And if it is a larger firm like Insight, for example, it might have more structure, it might have more of a timeline. But for the small funds that are like sub a couple $100 million, it typically is more informal and it typically is more ad hoc and need based as opposed to on a recurring timeline. So when someone leaves the firm or when they raise a new larger fund and have additional capacity needs, they might put out a job posting or they might not even post a job description and just hire someone directly from their network. But I'd say it's definitely less cyclical for the small and mid-sized funds. So what that means for you as someone looking to break into venture is something that I suggest is just mapping out all the VC funds in the ecosystem you're interested in. And then if they've recently raised a new fund, that may be an indicator they're looking to hire soon. They may be a better target. If someone recently left the firm, that might be an indicator they're looking to replace them. Um, but it definitely does vary. Like when I was recruiting, I think I started in late 2022, really focusing on getting that role in venture. And then my job at Two Lanterns started in March of 2023. So it took a while and it was something where the role opened up, but there wasn't, it would have been very hard to predict when it would have opened up. So I'd say treat every connection like someone who might be a good connector for you. No matter who it is, they could just know someone who's hiring. I would not focus only on meeting with partners or higher level, senior level people, but also talk to analysts and associates who are closer to your age, since they also may be more willing to be very casual with you, put in the extra time, and tell you, oh, this fund like doesn't have an official posting, but I've heard through the grapevine, I think they're looking to hire a new analyst. So I would just chat with people at a bunch of different funds, try to get that word of mouth as well as, of course, applying online. There's some sources like LinkedIn, different job boards where you can find role openings. but it definitely is a more unofficial cycle. It was something that took me a while, and so I would not get discouraged if it also takes you a while to find the right fit.
Yeah, and to really just like go down to it, it's really just building that trust. And then once they, something opens up or they need more work done, or maybe you can bring something of even more value, and then, you know, the smaller funds would kind of just come and say like, "Hey, would you like to intern for us? Or would you like to have a job with us?" Some could be different, but for most of the bigger funds, it's also like that. At the end of the day, it's really just like Lily says, every single connection, they could know someone who is a VC, and that VC could be hiring. So really just tell everyone, hey, I'm looking for a VC internship. I love VC. This is what I love to do. And then if they actually can recommend you, then that's amazing. But you also have to have that initiative, or you have to bring something of value. So Lily, could you talk about like how you got promoted to a senior associate? What are the key reasons?
Sure. So I was at Two Lanterns for about 2 years when I received the promotion to senior associate. So it was just a couple months back. Very excited and grateful for the opportunity. And I think for me, it was something where when I first started, I still did need more guidance. I started as an associate. I had, of course, startup and consulting experience, but over the last 2 years, I've gained a lot more independence at the firm. I take just a plethora of founder calls, really manage our top of funnel. And for founders that come in inbound through warm referrals or founders who we get connected with, I'm usually the first line of contact for them, kind of acting as a filter and then bringing the deal back to the rest of the team, the partners to move forward with or say no to. So I'd say just taking on that initiative to really manage our pipeline, manage our portfolio metric tracking, take on initiative for event planning, like we talked about earlier. Really just take a lot of those tasks off the partner's plate. I do a lot of just the random administrative things too, like helping manage our audit each year, filing in Delaware for all the yearly fees and forms, managing insurance, things like that. The things that usually you don't think about when you're going into venture, but if you are at a small fund and you want to stay there long term and really learn about what it takes to manage a fund, I think are really helpful to learn about. It's the structure of the three entities at the fund. So I'd say just over the last couple of years since joining, I've taken on increased responsibility, increased autonomy, and all of those factors have fed into the a decision to promote me to senior associate at Two Lanterns. And I'm excited to stay with the firm for a long time and hopefully continue to grow with them and reach new roles.
And you really just took on all the responsibilities that a partner would have done, and that is how you really get that promotion, is when you actually do the things for the role that you want to be promoted for. And then it would just come naturally. That's just how it usually happens. But obviously, you have to advocate for yourself as well. I know that you talk a bit about how to break into VC. For our viewers, who needs an actionable plan to actually implement right away, what would be your 6 month plan to fully break into VC for the people who's from a startup?
I'd say depending on where you're starting from, I'd say the first couple of months when you're working to break into VC, I'd focus on really just getting smart. And by that, I mean whatever your preferred method of media is, whether it's watching videos, reading books, listening to podcasts, doing that as much as possible. And not just learning about venture, but also learning about the different industries that you can really develop some of your own theses. Since something you'll get asked about in interviews is what industries are you most excited about? Do you have any hypotheses about the future of what's going to be the next hot thing? You'll get asked about AI, you'll get asked about all your theses. So I'd say really building up that personal understanding beyond just what venture is, but also if you have a specific industry of focus like healthcare, finding 3 trends in health tech you're really excited about and getting knowledgeable on some of the companies in that space, some of the new technologies there, really building that up. There's a few podcasts that I like to listen to. The All In podcast is great, but also just listening to the daily news and Wall Street Journal, just understanding what's going on in the world. I think something that helped me a lot is at Georgetown, I was a government major as well as econ. So understanding that macro perspective of how a tariff or a war or something like that may impact certain industries and developing your thesis around that. And then after you kind of get smart on venture and those different industries, once you do that, I would then do research into what type of funds are the most appealing for you. So going into it, you may not know, oh, do I want to be on a small team or a big team? Talk to people, ask around. This is the time to have those more casual conversations with people who might be more like your peers, like a new analyst or more junior level associate. Having those conversations, figuring out I'm really interested in this one specific industry and I only want to apply to venture funds there. Do I come, maybe you come from Latin America and have a really strong thesis about investing in startups there. Or maybe you come from the Middle East, so you might also have a geographic lens, and that might impact the funds you want to apply for roles at. Or maybe you really want to do Series A, Series B as opposed to pre-seed seed. So I would figure out really what you want and then structure your learning and your networking around that. Something I did after those tasks is developing an Excel spreadsheet of all the VCs that fit the area I wanted to go into. And so for me, I knew at the time I wanted to either stay in Boston. I grew up here, love the Boston community, or go to New York. So I made a list of all the VC funds that were pre-seed or seed stage generalist funds in Boston and New York City. And then I ended up filtering it after I had some additional conversations to be smaller teams since I realized I really wanted a role where I could kind of go over the whole life cycle of a startup from first investment to follow-on investments to portfolio management, as opposed to a role where I were just doing sourcing. So for me, that was where my interests were. But if you're someone who is very gung-ho about diligence and you only want to do that or something, you can also find those roles, or you really want to do platforms. So I'd say making that list of VCs really helps me target my outreach. And then finally, once you have that list developed and you have your internal thesis developed, I would start having coffee chats and conversations and calls. And you may reach out to like 200 people before you find the role. It may take a really long time, but the nice thing is, even today, 2 years in at Two Lanterns, some of the people I talked to when I was first recruiting are people I've kept as contacts and now I can share deal flow with. So it can only help you to expand your network, and who knows, maybe you talk to someone and you don't get the job there, but they intro you to the person who is the one that hires you. So I'd say, yeah, starting with research, then the target list, then eventually going into those conversations.
And it's just like Lily says, know what you want. And if you really do want VC, then actually just hands on, actually put in the effort to follow all these steps. And once you actually follow all these steps, then you're really, really, really on a great path, more than, the top 1% of people into VC. Looking ahead, what trends, in venture capital are you most excited about? At Two Lanterns, you're a journalist, but focused on digital health and B2B SaaS. What do you think is overlooked in the market right now?
Yes, there are a couple of trends. I think one specific industry trend that I'm really excited about is defense and national security. I think right now we're just geopolitically in a time where there's a lot of spending that will happen in this area. And I think with the advent of AI, there's just a lot of really exciting technology that's getting developed. And that's also partially, I previously had worked at Verifix, which is a national security startup. We were doing election interference detection, which was super exciting and went through the SBIR process. So that's an area that I have personal experience and interest in. Something else, which is just more general in the industry that I'm really excited about, is it feels like we're really at a pivot point where we're going to start seeing a lot of startups bootstrap or only raise pre-seed or seed funding, and then be able to just scale up with a very small team due to agentic AI, making their hiring needs and spending needs much lower. So that's something that I feel very excited to be at the early stage, since I think you'll still need that original initial startup capital, but there might be startups that become a unicorn without ever raising a Series A, since they are able to operate on a 10-person team or there's a great article I've read about the rise of the solopreneur, which predicts we'll see a unicorn started by one person one day. I'm not sure about that, but I think very small teams developing very large companies is a trend I'm very excited about too. And I think it'll really shake up the venture industry and be exciting to see as even now we get to see our startups that maybe 5 years ago would have required a lot more funding be able to just really accelerate product development and move so much more quickly due to AI coding tools and all of that.
Yeah. The funny thing is that there's actually a bet, like you said, between the biggest firms partners, where it's like
Mhm.
there's gonna be a solo, entrepreneur who makes it into a unicorn company this year in 2025. And,
Me- I'd
that
bet
would be
against
amazing.
2025, but I think eventually.
Yeah, that's the thing. And it's just gonna be so, so amazing when it actually happens. I know that you mentioned early stage is actually really, really important, especially in the next few years, where it's kind of like you said, Series A, B, C, maybe companies don't even need that. But what they really need is something to start. And that's something that, Irmar Novik, someone who also invests in Israeli startups, really said, is that there's always going to be a need for early stage because people need someone to help them start. What is one fun fact about you most people don't know?
I originally wanted to be a doctor, and I once spent a summer working at a hospital in rural Tanzania.
Yeah, that's awesome. When you go to all these social events, what is the best part, your favorite part of it?
Meeting new people who are very passionate about what they're building.
Yeah. And is there any thoughts you want to finish or we didn't get to cover on this pod that you would like to talk about?
No, I think that that about covers it. You've asked some really great questions today. It's been great to chat with you.
That was amazing, Lily. For anyone listening who wants to learn more about you or your firm, what's the best place to reach you? LinkedIn, email?
Yeah, I think LinkedIn. I try to keep up, get a lot of LinkedIn messages from founders, but I'd say message me on LinkedIn. And then if I don't respond quickly, feel free to message me again.
Yeah, and I'll put her LinkedIn in the description below. Out of everyone you know, who are two amazing VCs you would recommend as future guests to our podcast?
I will have to think about that one and get back to you since I'm not certain, I guess, just the exact profile you're looking for, but can definitely recommend a lot of wonderful VCs in Boston, New York, Israel, or wherever is the best fit for you.
Awesome. Thank you again. And thanks to everyone who's listening. Comment a question you want to hear from Lily or from our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share it with someone who's interested in getting into venture. We'll see you next time on Break into VC.